Hello, everybody. Welcome to Connections Realty Group and Friends. And I have a special friend with me today, Mr. Derek Griffin of the Derek Todd Agency. Welcome to the show.
Hey, welcome. I'm welcome to be here.
Oh,
Thank you.
awesome, awesome, awesome. So, Derek, before we get started, because I have some awesome questions to ask you today, tell everybody a little bit about yourself.
Okay, a little bit about myself. Where do I start? Well, first of all, I am a family man. My goodness, married 32 years, three children, three grown children. No grands, bet no grandbabies yet.
Oh,
Looking forward to that. I'm also a pastor of a church down in South Atlanta area, and I've been doing that for quite some time. And but I also have my insurance agent, Derek Todd Agency. It's a full service agency. We service here in Georgia as well across the country in areas of life, retirement, long term care, and estate planning.
I love it. I'm going to tell y'all, he's being very humble. He's been doing this for years and he's an absolute beast. Y'all know I do not endorse many people, right? But today, so Derek, what I wanted you to do is, of course, we're in real estate and we deal with a lot of, people purchasing homes. And I wanted to talk about mortgage insurance today because I don't think some people think about what would happen to the home that you've invested in if something happens to you. What would y'all do? So, Derek, what talk about mortgage insurance and what it's for me?
Okay. Let's start with the concept PITI. A lot of people who have bought homes and got financing for the house and maybe used a government type federal loan, there's a thing called PITI, right? Principal, interest, taxes, and insurance.
Right.
Now, that insurance, that's not your insurance.
Right.
That's the bank's or the money's insurance, right?
Right.
And you're paying it. You're paying that premium so that if there's a default on the loan, the bank gets their money back. It ensures that they get their money. Well, you can get mortgage insurance too, just like the bank.
Mm.
So at the end of the day, if you get your own private insurance for mortgage, which is basically a term policy that has the value of whatever the mortgage is, and the beneficiary, here's the key. When you do the policy, it's a term policy. So thereby, as you make payments, obviously the mortgage is going down, but there'll be money in the policy that will pay off the mortgage if you pass on,
Okay.
but the beneficiary gets the difference, which is a great deal. So not only do they get a house debt free when you pass, they get some money to go along with it. And that's a pretty good deal, right?
That's a great deal. And I'm going to tell you, I don't think people think about that. And we see a lot of people in a situation they then had to sell it, or the kids don't want it because they already have one. So, y'all, you've got to give us a call because mortgage insurance, if you own your own home, is something you should have. Like you said, if the mortgage companies have it, right, you should have your own as well.
Absolutely.
So I like that. Um, I know also when we talk, and insurance is not very expensive, just depending on how much you're getting, right?
Correct. It has a lot to do, like, say, for example, underwriting is a part of the whole life insurance process, right? So
Hmm.
it's based on mortality. So the younger you are, the least expensive it will be. If you
Gotcha.
wait too late, then the older you get, then the cost goes up. But the least expensive insurance a person can buy in life insurance is term insurance, right? And so, with that said, it's best like when new homeowners, and they're young, a new couple, that's perfect for them
Right, right, right.
because, I mean, they could get $1 million term policy and pay $50 a month. I
Y'all, we
mean
need to turn our kids on, okay? But don't kill them. Just this is for them.
yeah,
Okay, right.
yeah,
But now I like that because the other thing is I want us to think about because I know, we're so busy, y'all. We're working, we're trying to acquire different things, but are we protecting our things? And so for husbands, well, I won't even just say husbands. If
mhm,
you're married, you want to make sure your other person is covered.
true.
So at least this insurance, this is the insurance for your house. Now the house is paid off. Now your husband or wife doesn't have to worry about missing your income and struggling to pay a mortgage that it took two to pay. Now it can be paid off. I just think is a no-brainer.
Right. Well, here's how I explain to my clients the importance of life insurance, not only from a mortgage insurance standpoint, but personally, right? So let's look at it practically. When we have assets, assets are things that we acquire through purchase. A car is an asset, but it's a depreciating asset. But
Okay.
a home is an asset, it appreciates. Now, guess what? You can't finance either of those unless you have the appropriate approval from the money people, right? And that is, you also better have insurance. You can't roll off the lot with a brand new car
Absolutely.
finance without having proof of what? Insurance.
Insurance. Right.
Okay, you can't close on a house that's being funded by somebody else's money but without proving that you have homeowner's insurance on that home. It's mandatory, or you won't get that house.
Right.
Well, I personally feel that we as human beings, as husbands and wives, we're more valuable than the house and the car because guess who's paying for all?
Absolutely.
You see what I'm saying?
Absolutely.
We really have to recognize it's not paying for itself. The true value is in the person that's paying it because you're the one going to get the resources to
To
make
make it
sure exactly, to make sure the car stays with you and not
right.
repossessed, and that the home stays in place and not foreclosed. So, thereby, if all of a sudden, if I'm that most important person in that trifecta and I don't cover me
Cover.
to replace me, because
Absolutely.
you better believe the bank wants to make sure if that house burns down, it can be replaced.
Right.
And you better be sure that the person who financed that car, if that car is totaled, you can get you what? Another
No call.
car.
Right.
But it's gonna be difficult for a wife who's been with you for so many years, that's in love with you, to go find another man to take your place,
Absolutely.
and vice versa. So, and from an income perspective, so we do a analysis where we help our clients to determine, well, how much should I have to replace me, and for how long will it replace me? And typically, we use a formula.
Well, what? Wait,
Yeah.
wait. Don't go
Oh,
with that
okay.
because we're going to do another
Okay.
segment on that
Okay.
because I want them to be able to focus.
Okay.
So, y'all, in closing out, if you own property, whether it's investment property or whatever it is, do yourself and those you love a huge favor and have mortgage insurance. That if something happens to you, because we're talking about multiple insurances here, but right now we're just talking about that. Well, I have insurance. Well, don't take all your income. Right now we're just talking about for your house only to make sure that that is paid off, and your other insurance is for the absence of your income to do some other stuff. Okay. All right. Love your family enough. Leave that legacy, and just do term insurance on with the mortgage insurance. All right, y'all. Y'all know what we're doing. Either go back to work or go back to sleep. This is Connections Realty Group and Friend. I'm here with my friend, Derek Griffin of the Derek Todd Agency. Guys, we see y'all next time.
Pleasure.